All right, we are back. Okay, 1 second though. Let's do this one. Okay. Ouch. Okay. Alright. Everybody. Okay. Oops, save. That's good. Okay. We are back. Welcome back. Everybody. Okay. I don't know why I say that. Okay, give me a minute. Ooh, here we go. I think we're good. I feel like there should be a faster way to do this. I feel like I'm fumbling every time I do this. Okay. Let's do this so that everybody. Ellen, thank you for joining. Gonna try to find the right size here. Some reason I could ever. Alright, so how are we doing today? So I'm gonna stay. I think my limit has been 2 hours, right? And I feel like every 2 hours I feel so exhausted. So today I might just do 1.5 hours if I could, but we'll see how the day will bring us onto the show. Honestly, I don't have too much plan to talk about, so we'll see. We could do a free form thing as well. So alright, so that, and then sorry, I'm doing this so I could see the. Oh wait, actually. Why did it take me so long to do this? Makes no sense. Alright. So Lynn asked, will Jimmy hit 12, 11, or maybe 10? Well, it's tough to, see the price action. Well, let's talk about it. I think, again, anything could happen. Honestly, this level was a support level that I was looking for a while. $12 or so, right? If you look at the historical price point back then, $12 was. Let's see, is it an all-time high? No, it wasn't an all-time high. But it was interacting with, this. Was it this one? No. How did I get? 12 right here. 12 is right here. So it's been there before. So the yellow line there. So it's been interacted with a couple of times, right? Acting as a resistance right there, way back. Before the dot-com bubble, right? Or not dot-com bubble, sorry. 2009 crash right there. And then, back in 2014, it's kind of keep it as a resistance. So the bounce off of that level there is pretty significant, right? So perhaps that's the last support line that we have to kind of hold. So if it dropped down to 12 again, there's a good chance of a double bottom here, right? Like the W thing that they were saying, or that trader usually looked to, right? So yeah, it's possible it's gonna come back to $12 again. So I say $12 a give and take. It's 11.78 right there. And then whether it's gonna bounce or it's gonna go the other way too. How low? I have no idea. Like, it's, again, like, this stock doesn't trade on any technical or fundamental, so it's kind of do what it does. Kind of do what it wants to do, so to speak. So, hi Jay, thank you for joining. I appreciate you having my back yesterday. So, it was fun. I feel like I have a lot of echo chamber. A lot of people agree with me. So, yeah, I'm glad you were here yesterday. But how long have you known Winthrop? Or have you seen Winthrop? I know he was in Moran's chat for a while. And I'm just curious because, like, Winthrop hasn't been, in my channel or whatever. I know he probably listening in a minute, but I'm just curious from your perspective, Jay. How long has Winthrop been kind of trolling in Moran's chat too? So yeah, just curiosity. So that's just my kind of thought there. I think the whole meme coin things, of course I'm going to address it a little bit here, but nothing new. I'm sure they're going to try to pump it up again. I think I just saw an article about how Shiba and hold on, let me see if it says here. Look, the new Gamestop meme coin is trying to recreate GME stocks in 2021 surge. So of course they are kind of, this was yesterday though, but for some reason I just saw it today. So yeah, I mean they it's fun to read if you want to read about this. Yeah, sorry, kind of got distracted there. And then what is this? Want to lose your money? Memes coin. Meme stock and group thing can't help. Yeah, you see what I mean? It's like, want to lose your money? Put money in GameStop, right? And that's a whole point of these type of article, is to kind of scare you to death on those type of things, right? And this is, again, it should be against the law. They're bashing the company, knowing nothing about the company, or at least doesn't address anything factual about the company, right? And then to group all of these company together that doesn't relate to anything, like AMC, right? For example, it's just egregious. But that this is the world that we live in, and that's why it's so important to come up with your own conclusion and look into the company yourself. So if you a meme stock or whatever, meme coin trader, you think that you could replicate what GME is going to do last 3 years, then buy the stock, right? Again, I'm not advocating for you to do it, but this is the real way, and again, it's the company that is the one that is the thing that will give that catalyst for that run, if that's is going to happen, right? So yeah, the earnings report is coming soon. Is it? I think I heard Moran said it's March 19th? Am I saying this wrong? Okay, if it's March 19, it would be right here. Okay, so that's the day. So a couple day before this date right here, estimated date. I don't know why it's still an estimated date there. Usually they're pretty good at updating the date there. Okay. Alright, so nobody's saying anything. So feel free to chime in anytime too, so just make it's more dynamic. I feel a little bit kind of under the weather for some reason. My voice is just going crazy. But anyway, so let's talk about SoFi a little bit. Of course, SoFi has been kind of on the news lately. Of course, we know that. A couple of days ago, they have great earnings, quote unquote, right? Beating on earnings and all that stuff. And of course, again, my thought it was that the expectation was pretty low for them to be able to kind of beat expectation in that way. And my theory is that they wanted this stock to run that day, right? So that, liquidity or whatever, they need to bring more and more people in to buy into the stock. Again, not saying that the stock is terrible or anything like that. I'm just saying it might not be the time for the run for the banking sector in general because of the overall kind of sentiment about banking sector in general. Why do I say that? Well, apparently there was some bank that was not going under, like dropped by, hold on, let me see if I have that. I think George Rebel Capital or something. Rebel Capitalist. He was talking about the bank, some banking crisis. Here. Okay, 1 second.
A bank in New York might be going bust. And it's not just an isolated instance when you actually understand how the monetary system works. This might be the next phase of the banking crisis, which started in March of 2023 and quite honestly has never been fixed. It's not like the BTFP fixed this problem. They might have just punted or papered over it temporarily. Let's get over to this article from the Wall Street Journal. It talks about what happened today, why the stock price was down by like 40%. I think it closed there around 35% down just today. That thumbnail that we use, that's the actual chart of this bank's share price today. When I said that just happened, I wasn't joking. That literally just happened. And then what I want to do is I want to go kind of beneath the surface and I want to reveal how these banks are settling. Go back in history, go back in time, and then you're going to understand why the Fed can't solve this problem. It's going to be crystal clear by the end of this video. Okay, so let's go over to the Wall Street Journal. Let me do a screen share. Josh is MIA, so make sure you. So it's not that they cut their dividend and post a loss. It's everything else that went along with it that shows how frail and fragile the banking system is right now, at least with these regional banks, and obviously with a lot of systemic risk with the entire monetary system. So just going down through the bullet points here, I've got some highlights. The chief executive, Thomas Kangmi, said the bank holding company is adjusting to the demands of being large bank, get this guys, after its purchase of assets and liability from, drumroll please, Signature Bank.
Signature Bank, I think they were involved in, remember the crypto, the FTX debacle. So it's all related. Obviously, everything is kind of connected in that. Again, I'm just heard that it's always about GameStop here, but it seems like, ever since, that run, it just seems like everything's just going, the Fed just doing something unprecedented. It's always like unprecedented this, unprecedented that. So, and then, you have 3 wars happening right now, and, and then you have like the treasury bonds making...
the bond market is behaving in a highly unusual way.
Highly unusual way, there you go. It's always like that, right? Something is going on behind closed door here that we don't know about. Again, I would just be speculating, what's happening. But yeah, I'm gonna link this video down below. It's pretty long, but he's going in depth into the crisis. Apparently, it's really all about debt. How the debt is being settled from institution to another institution, right? And all of it's based on trust, right? So if one bank doesn't trust another, they won't do that business with them, right? So these type of things gonna continue to happen. So whether the Fed or taxpayers' money is gonna have to bail them out again because they're incompetent. Like, they don't know how to run the bank. So, even though you're out of bank, you're still somehow are not able to do that. Now, the reason why I relate that to SoFi, I think that the negative sentiment is going to kind of spread to SoFi as well. In my opinion, even though they're profitable, I get it. They're profitable. I'm not knocking on that, but this time is not going to be a good time to buy at the moment. I feel like around $4 or $5. Don't quote me on this. This is just the price point that I'm willing to kind of accumulate. That's what I did the last time, and I was doing pretty well on that one, on this one right here. I think I sold around $9, something like that. So, but again, I've been accumulating SoFi for a long time, even up here. Like not one share at a time, a couple shares at a time, $25 here, $25 there, right? Sorry, 25 shares here, 25 shares there. So just a dollar cost average down. And this is the strategy that I'm comfortable doing for my own, personality here. So again, you could also lose as well if this company go to zero, right? So be on the lookout for that. Now it might bounce off of this line right here because of the gap fill. Perhaps just go up in a couple of days here and then just bounce back again. So I was looking at the Fibonacci retracement here, and it's kind of like hit that golden line there. So I'm only kind of only drawing it from the body of the candle to another body of the candle. So you see, if I zoom in a little bit here, you could see that line right there. Usually that's the reason why they're called golden line, golden ratio, whatever. It seems like the majority of time, when I guess price interacted with that line, it seems to bounce down, right? And so, and it's going to reverse the other way, so to speak, and it's going to hit the, or most likely to interact with the blue line right here. And so that's why, I draw it like that, so that it's kind of like reminded me, okay, if it hits $5.50, keep an eye on it. Doesn't mean I'm going to buy 50 at that price. I might wait a little bit to see how the price action goes. But yeah, again, this is in my small trading account here, so that I'm not bored. I have different account to kind of keep me busy, so to speak. All right, so that's SoFi. I think it's good that they are, but again, I see people pumping it again. Even that GME guy, like financial education guy, and he pumped that one up as well. He was like, "Oh, I'm buying it now. Here's why." Right? I don't know. All right, so that's that. what else do I have? So I was looking at this. So there's a reason why I put misinformation there. I don't even want to kind of play this, but let me just summarize it. I'll just play the video, but not the sound. So apparently he is saying, I'm not saying that he's wrong here, right? But I think it's misleading a little bit here. Because in this video, he was saying that, I'll link down below too later on, so you could kind of verify yourself. That GME had the reported short interest. I think he reported the short interest. Oh, this is XRT. Sorry, I should have the fintechs for, or Fintel for Gamestop. Okay, so right here. So he was reporting this number as if like it's more than the float. I don't know at what time frame. I think he's misleading. I mean, misunderstanding that GME was already did a 4-to-1 stock split already, and so this amount is not the whole float, or more than the whole float, almost than the whole float. So he was saying that's the amount that is being shorted, that's the share there. And so I just want to clarify, if you were to watch him and me at the same time, hopefully it get across. I'm not trying to pick fights here, but I think it's important to kind of address that too. I know, like, this is just a reported short interest. We don't know what is unreported, right? That's why I said yesterday I'm only willing to admit to what I'm seeing right here on what I could gather for myself. And just to clarify for people though, it's not the whole float here, right? Because we have 305 million shares right now, instead of, it used to be 76 million shares of the whole float, right? For the GME share. So that was pre-split. I keep getting that mixed up. Alright, so price action today was pretty curious. Volume is pretty higher than I expected. I thought it would be lower than yesterday. So it came out to be 2.6 million shares being traded back and forth here. And then what else? Let me see if I could see. No. Oh, right here. Alright, so if you look at right here, so outstanding shares is around 300 million. So it's not 60 million shares, and it's the whole float right now. And then as far as the day to cover, yes, that's a high amount of day to cover, but it's because of the volume. Let's say the volume is higher, like on the days of earnings or whatever, just take a note that the data cover will be shorter due to the volume. Depends on how much volume is being traded that day. So technically it's not that egregious, so to speak. Yes, it's play a factor in perhaps it takes them multiple days in order for them to close all of the position, but I don't think they can close all of the the shares that they're being shorted. I don't know what has to happen, but man. So let's see, if you look at today. Oh wow, they already put up the cost to borrow went up 1% since then. So okay, so tomorrow if you want to short the shares, the GameStop shares, you're gonna have to pay 4.2%. fee for that, right? Now that's not too much because it's I think it's a yearly basis, right? Yearly fee. So for them, technically they could still afford to short it, so to speak. But the fact that the cost to borrow increase, that's a good sign for people like long, right? People who go long or whatever. And for us as a long-term investor, we don't really care about all of this, right? All you have to do is just accumulating shares of the company. So this is just, reserved for like people who are antsy and they want to buy and sell and all that stuff, right? That's on them. Okay, so today non-exempt volume is right here. Exempt volume is 3,000 shares, 3.5 thousand shares, not 3.541. And then you have shorted FINRA here equals FINRA, FINRA total volume. Yeah, I can't distinguish between these two. Why is this more than that one? I wonder. So this one is short volume ratio. So around that, I think that's the number that you see up here. Oh, no. Wow, it's kind of different there too. But 60%, that's what it says there. But if you look at the chart right here, chart exchange right there, it's 66. So again, like different source, different time frame perhaps, I don't know. But if you look, 74% is being shorted. Like, come on. Like, is that not egregiously high? Never go below 1150. Okay. Never. Well, okay. All right. Got you all. Thank you. Winthrop is whiskey bag. Really? Is that the same guy? Trollbot clown. Is it a confirmation though that is the truth? Yeah, I mean, that's evidence though. If that's the case, if that's the same guy that I heard him kind of battle Moran's, on earnings day, that's even confirming, even more, I get almost more conviction towards the play. Because I would never, like, let's say we make the money, right? Like the shorts are not sweating bullet right now. People are shorting this company, are not sweating bullet right now. Why would you come to, places like this? Again, I'm a small YouTuber here to try to convince people otherwise, right? Like if you're making money, why don't you just make money like quietly? Why do you have to advertise that, hey, I make money shorting this stock, right? And you guys are wrong to hold this stock for that long. And why you continue to do this and all that stuff? It just evidence to me that, these shorters, they have limited of time, right? Because that's all you have is time, right? And they don't have that much time, right? If you have to pay those fees and all that stuff, it depends on how much leverage you are too. Those leverage gonna cost you a pretty penny. So AMC dropped to 4% today. Let's see. Yeah, so I don't know what's going on with my Wi-Fi here. Hey. Okay. Oh, okay. So it dropped to $4.05. And then they have their earnings coming. So the estimated earnings is negative 50 cents. Yeah, $2 perhaps is going to be, and of course, I bet you anything he's gonna announce more dilution and all that stuff. And man, you guys, I don't know how people are. Well, there's gonna be people. It's gonna be people who fall for this BS. Regardless, I don't know how to cover this stock, but other than they might try to convince people for this gap fill right here. And with this gentleman here, I'm sure Marantz has done his video before, and he went after Marantz, like, like attacking him personally through video, obviously, but saying that Marantz needs to, I don't know, not as intelligent or whatever, right? But I think, he's mostly pumping AMC information. And I think I just saw a video that he made about this discrepancy right here for AMC. Now, I don't know why it does that, but I don't think that is that big of a deal, right? Glitches like this happens all the time. Perhaps it's because of the program didn't read it right or whatever, right? So this company has nothing, right? We all know what AMC is, so I'm not gonna beat on the dead horse here. But yeah, how much do you have left? You don't have anything. You don't have anything. Again, they have negative shareholder equity. So even if you are paying all the debt, right? You would still have months or years to go, right? And then also too, I heard AMC Bigham saying about how, if only Adam Aaron could just eliminate all the stores, cut down some stores that is not profitable, well, they can't, because they enter an something lease, right? They can't. Even if they want to, they cannot cut their footprints, right? And so there you go. It's one of the things that these board of director, leadership, or whatever do in order to bankrupt the company. So I know people try to convince you otherwise. But there are still people who pump this company, and there's a lot of video out there. Channel out there who still, Adam Aaron is this or that. There are so many channel, different people, different, opinion on AMC. It's always like, I hate Adam Aaron, but, AMC would still gonna squeeze type thing, right? So you know who I'm talking about. I think it will touch the high 9s, and I hope I'm wrong. Okay. If GME goes past 1050, I'll consolidate one of my account to be all in. Okay, all right. A golden pocket retracement. There you go. A golden pocket retracement. Thank you, Jay. Yeah, it's just some like a little things that I learned when I used to be a day trader, so I kind of know all this tools that people use, or try it myself. But again, these type of tools really doesn't do much unless you are monitoring it, like a larger time frame, and it takes time to kind of get to that point. But most traders or day traders, they don't really read the 1 day chart, right? So it's more like a kind of swing trader, so to speak. But usually day traders, they use the 1 hour, right? And 15 minutes, depends on who you are. So like 15-minute candle. So they would try to, predict this movement right here. But sometimes, again, like you can't predict this type of stuff unless you know its earnings and how the company is being traded every time it's earnings time, right? Or close to earnings. So, and this is why I follow SoFi too. Again, I have SoFi as an app, therefore naturally I do kind of follow the stock along. So that's why it's in my purview, so to speak. But anyway, so let me show you this NYCB. This is the bank that George Gammon was talking about. How in one day, in one freaking day, you guys, like, has anyone called this a shitty bank or a shitty company or anything? Like, call for the demise of the CEO, how the CEO is a failure? I doubt it, right? I doubt it. So I don't follow this bank too closely. I just know about it today. When did it pump up? Did it ever pump up along with GME here? Hold on. Right here. Okay. 2001. 21 right here. Alright. So apparently they were buying the Signature Bank asset and now they're in trouble because it's too much toxic thing that's happening here. Let me see. Moody put New York Community Bank Corp on the review for potential junk downgrade. Wow. So it's still it says a potential jump downgrade. With just that news alone, it went down by 38%. Oof. Remaining mixed bag, this loan. It'd be interesting to see what's on their balance sheets, huh? Let's see. All right. So Enterprise, this is the bank that went down by close to 40% there. It looks like they have a negative enterprise value right there. Whew. That's tough. Okay, so this is a trailing 12, $4 billion in revenue. Seems like their revenue went up, right? Look, revenue went up. Gross profit went up. But they have toxic loan, I think. Some sort of asset that they can't. I wonder what. Wonder what those are. Okay, so free cash flow negative $1.6 billion in the negative. So something to do with cash flow margin, cash flow. So the operating, maybe capital expenditure. Perhaps they're inflating their books, right? Hold on. Okay, they have asset there. 100 and then liability. I wonder what's in that, Hold on, this is... Okay. This is kind of weird because this is not the most recent one. Shouldn't it be January 31st? So they did report their earnings before already. It wasn't as bad, so it must be something recent, like within a month of that report. yeah, I need to read up on more, kind of follow up what's going on there. But yeah, that's not a good thing on the economy here. Again, these banks has been and look at the price target. They want you to buy into this, right? $12 right there. What's the forecast? Okay, 13 analysts want you to buy. It's a buy recommendation right here. It's hard to believe that they didn't foresee this risk, these analysts out here telling you to buy into this. Of course, Wedbush want you to buy into this, right? For those of you who doesn't remember who Wedbush is, I hope you do. If you invest in GameStop, you probably hear about it many a time. So, yeah, Wedbush want you to buy into this this bank. What's the price target? $8, right? Wait, yeah, price target $8. Sell or hold. Oh, sorry, sell or hold. So from sell to hold. For this, UBS hold, buy, strong buy or hold, strong buy. Okay, so I apologize. Wedbush want you to hold. Price target is $8, so now it's at $6. So I bet you anything they're gonna be like, buy this stock right now, buy this bank right now. I bet. I have to kind of verify that like later on though, in the future. All right, chat. Hi, Vinny. Thank you. When job is private equity plan. I'm sure, I'm convinced now. Of course, like I always try to give people the benefit of the doubt, but, it's, again, like I don't want to go the other way too. It's like anybody who have any disagreement with GameStop are all private equity. I'm not of the belief of that extent. I'm sure most of them are just misinformed themselves because they believe in the media more so than the private equity angle type thing, right? Now because Windrop has been kind of all over the place with rants and my chat out all of a sudden, right? It's pretty easy to come up with that conclusion because of the things that he says, right? It's just to misinform people, so to speak. Be more rules. Oh, thank you. Appreciate it. I try. What I want to do too is like it's one of those things where I kind of have a thought, and this is it's not related to GameStop, but it's one of those things where the world needs people to be aware of of certain things, right? Whether evil, whatever, good or evil. I think good will always win out, but I think it's just that sometimes good people just pay attention to too much of like misinformation, right? They tend to elevate the wrong people in power, and I think I had a discussion with Lionel too, is that oftentimes I see time and time again, you see a lot of figureheads out there, and you've known many of these famous people that is being kind of elevated. I'm not going to name names. I'm sure you guys know who I'm talking about. Like every single one in the politics, in the sphere of the billionaire class as well. They always elevated people who are very selfish, right? Very ungrateful to be where they are, and that they are entitled to all of those wealth, right? And so, I could name one right now. I think Elon Musk has been kind of in that forefront now. He used to be a good guy, obviously, good guy on my book, right? Because of Tesla and all that stuff, what he went through. He was all about innovation, right? Innovating and trying to do good by the world, right? but at some point in that journey, I think he lost track. It's like it's all about power now. So I don't know. Again, perhaps money does this, but I think it's more than that. I think his ego kind of got into him. Or perhaps he was always like this, or he just become more and more entitled as time goes on. Again, I'm not saying he's entitled to his own shares compensation here. I'm talking about being overpaid, right? Just Marantz he did a video just now too that I watched before I got here, and to summarize it, he was saying like Elon Musk was just doing this. The company only have a certain, what is it, $15 billion in profit, but he wants $50 billion in compensation, right? So it just doesn't match the company's earnings here. And I'm sure he's been selling shares left and right too, to benefit himself. And how many more billions do you need, so I know he just bought like Twitter and all that stuff, so he might need that money to buy Twitter, or else he won't be able to keep Twitter or whatever. But I'm sure he'll be okay. He will be fine. But let me see how much Tesla made this fiscal year, or trailing 12. Let's do trailing 12. So net income right here. So net income $15 billion. This is what Marantz was saying about that. Yeah, so your company net income is $15 billion, but yet you want $50 billion compensation. And that's, yeah, what? That's a definition of overpaid executive, right? This is what Ryan Cohen despised. This is what Ryan Cohen tried to fight at the very least, in his own way. I'm not saying he's, in my opinion, he tried to blaze people to do the same, and kind of at least, hey, think about your own company, think about your own shareholders, think about people who are actually believe in you, and continue to believe in you, right? And if you couldn't deliver, you have to take a hit as well, right? So if your company only make $15 billion, perhaps $1 billion stock compensation. How about that? Like, so yeah, that entitlement is kind of cringy in my opinion. And of course, that's also kind of ring true to old money as well. Like people who are from the older rich generation, they just become numb to the working class having to struggle all the time, just to pay ends meet, to be at odds, just to maintain like the lifestyle that that is subpar, so to speak, right? I was watching, like, people were complaining about inflations and all that stuff, so that was kind of like eye-opening too. Like, of course I've seen a lot of TikTok video, single mom, single dad, even single people who are not even having family, they couldn't afford to live on their own, even my own experience too. I don't think I could afford to live on my own. My case is a little bit special, but I feel so fortunate to have the ability to do what I do. And again, like, I'm not saying that I make a whole bunch of money here, but just enough to see my future kind of a little bit brighter, right? Or have the hope for the future here a little bit. But earning the income that I earn from my regular job is not that great, right? I'm just like, I always joke around here, I'm just the peasant class at the work class, so nothing special. But the fact that I know about the stock market and the crypto kind of give me a little bit of hope here. So I'm hoping to to be more. Sorry, GTG. What is TG? Grand Theft Auto? What is CG? Am I misreading that, Lynn? But yeah, so that's just my rant there. I just saw Bitcoin flip green all of a sudden. So what's going on here? Right, just happened right now. Hold on, let me see. Yeah, so I think, if you were to look into what's going on in the crypto market, perhaps they're going to try to, pump Solana, before earnings. I don't know, liquidity to try to, get more liquidity to short more or do more. I don't know. It's kind of interesting on how they are doing this. But hold on, let me see. I think my internet is so slow. Okay, so $1.6 trillion market cap right here for all the cryptocurrency market, with Bitcoin cutting close to $1 trillion right there. But I think it's going to continue to come down until the $32,000 or $30,000 coin again. I'm not expecting it to run, Bitcoin to run to $100,000 in this year at all. I think 2 more years, 2026, I think that's the next bull run. So that's why I have my chart kind of look at the price point right here to accumulate. So I'm waiting currently, so that's good. Okay, this is Solana. This is the coin that kind of mint GME MEME Coin right here. If you look at their market cap, is like $40 billion right there. $40 billion. That's crazy. Right? So I don't know. Again, I don't have Solana myself. Have never followed the company, but I've heard about it. I've heard about how it's blockchain and all that stuff. But I've heard the network wasn't that secure before that. But I don't know. Again, I would be speaking nonsense at this point about it if I would speak more. Okay, so Bitcoin kind of playing that around that $42,000 a coin. Yep, so I was kind of wanted to listen to this one. I don't want to play too much here, but okay, let's see what he think is anomaly right here. So I'm gonna speed him up a little bit, but I'm just gonna play a little bit. So I'm gonna send you this link too. So
it's time to start paying close attention again. Now, what normally happens after a big rally is that the market will pause and reassess the situation. Interest rates, after dropping sharply, will go sideways to slightly higher, in some cases substantially higher, over a period of several months. Now, we actually had a huge rally at the end of 2023, a near historic run, and so we expected early 2024 to be consistent with that historical pattern, where rates, after plunging to the end of December last year, would go slightly higher, sideways, maybe substantially higher, over the first couple months of 2024. And the way the year began, that pattern seemed to be playing out. But over the last week, it appears as if rates are ready to start going lower all over again, after actually less than a month since the end of the last rally. So not only would that cut against the historical context and pattern, it's also, as I talked about in yesterday's video, in the face of a tremendous deluge of supply, an ongoing deluge from the Treasury Department itself. So with those two factors, the market may be betraying the historical pattern, as well as in the face of all this Treasury supply. We have to ask, this highly unusual behavior, what is actually behind it? Before we get to some answers on that question, let's back up and do the historical review, because I think it's important here. I'm going to talk about a couple of cases when the market rallied and then there was a pause, and these are some of the shorter cases, hopefully so that we can make some comparisons then to now to see if we can't figure some of these things out. And we'll start out with the first one, 2019, the last cycle we went through the same type of behavior. And we had a major rally, the landmine as I call it, at the end of 2018 during what we call Eurodollar number 4. That was November and December of 2018, lasting until the early couple days, first few days of 2019. And then right afterward, you had that pause, slight backup, but it didn't last all that long. The 10-year Treasury had gotten as high as 3.24% as of November 8, 2018, and it rallied down to 256 on January 3rd, 2019. The 2-year went from 298 to 239, so these were substantial enough rallies. And then the 10-year backed up to 278 again by January 18th, the 2 years at 262. And from there, rates kind of just went sideways until early March. And then the second leg of the rally was on. And not coincidentally, not long after that second leg of the rally began, the Federal Reserve was cutting interest rates. And by September of 2019, of course, they were doing QE again. Of course, they said, don't call it QE. We're not going to call it QE. There's just a bunch of stuff in the repo market. And we're trying to do something about that. But we all know it was QE. So the market had anticipated, not what the Federal Reserve was going to do, that's part of it, but the market had anticipated the conditions in the monetary system and the global economy, which would lead the Fed to rate cuts and QEs. And it wasn't just the Fed of the United States. Same thing took shape all across the global bond market. In Europe, rates were synchronized in Europe to US Treasuries. The European economy looked incredibly weak, heading toward recession. And of course, the ECB, which had wanted to end its QE, had to actually restart it again by September of 2019. So globally synchronized bond yields, bond movements, but in what we're looking at here, we had a rally in bonds into 2018, and then that very short more sideways pause period right afterward. Then, of course, the big rally after that and the rate cuts and all the central bank action. The other case I want to bring up is one I have talked about pretty frequently, and that's 2011, Eurodollar number 2. We had a huge rally in Eurodollar number 2 in the middle of 2011, unexpected, of course, because there was a global liquidity crisis going on at the same time. It wasn't European sovereign debt crisis. That was simply the spark that lit the repo collateral shortage that became this Eurodollar number 2. So you had rates that had been going up since the end of the Great Recession, although 2010 was back and forth. And remember, interest rates, the interest rate fallacy, interest rates go the opposite direction of what you're told to believe. Higher bond yields are a good sign, especially after a tremendous period like 2008, 2009, where everything looked really bad because it was really bad. But from rates that are really low, we want them to go higher. That higher would be normal. Higher would be recovery. And so bond yields that were back and forth through 2010 into early 2011, at least they were moving in the right direction. Higher is the right direction. But in February of 2011, bond yields began to move lower again. So February 8th, the 10-year U.S. Treasury was 375. And by July 27th of 2011, it got down to 301. So a substantial rally through the first half of 2011. The 2-year Treasury from February 8th to July 27th went from 86 basis points down to 44 basis points. And then the big historic move at that point. From July 27th, really over the next couple weeks, yields just plunged. Because again, falling interest rates are a bad sign. And during that plunge, we had the Federal Reserve talking about doing bailouts of markets like repo or restarting all of their emergency funding programs that didn't work in 2011 again, just a couple years after the crisis had ended and after doing 2 QEs in between. So market rates plunged, coincident to liquidity crisis, rates going down, not a good sign. But after that plunge, we get to September of 2011, September 22nd, which is when the Fed came out with its Operation Twist genius idea, that at least caused it caused the beginning of this pause period. The rally ended in September 22nd, 2011. By then, the 10-year was all the way down to 172. But from there, over the next month or so, rates backed up pretty sharply. The 10-year got up to 242. The 2-year went from just 16 basis points on September 22nd to 31 basis points by October 27th. But after that initial month move, which was a pretty sharp move, rates went back down again afterward as the central bank world tried to sort out the growing monetary crisis that was sweeping throughout the system. It was starting to cause economic issues that we could see, especially in Europe, because that's where much of this was focused. And interest rates were sideways for several months there before the next leg lower in the middle of 2012. You see a lot of similarities here between what happened in 2011 and what might be shaping up 2023 into 2024, assuming, of course, that interest rates continue on the short-run move that they're on. I mean, that's the full caveat here, that any kind of short-run move might be nothing more than a random fluctuation. But the rally that's going on in the bond market, the nascent possible rally that's going on in the bond market, has lasted over the last week or so. And again, today got a huge boost. So we have to wonder, after just a short period of time pausing from the end of the last rally, what might be causing renewed interest in safety and liquidity.
Safety and liquidity. I'll just end it there. So I think what he was saying, so this is a 20-year Treasury bond, right? So today it went spike up. So when the value of the bond goes up, that means the yield went down. So the value, oops. Sorry, that's terrible. So the price, just think about the price. How about that? I think it's better. Sorry, I don't have my pen with me. I have the mouse over here. Okay, so when the price goes up, okay, I'm gonna try to spell price over here. And then when the price goes up, the yield goes down. So if it's down here it used to be, let's say 4.0, right, down here, right? But it goes up like this. From 4 it turns into 390 or something like that, right? Depends on how much it's falling, right? So that's what he means by, you know, when the price goes up. I think that's what he meant by that. So I'm trying to understand what he was saying here, that, you know, when this spike goes up, people are fleeing to safety, right? So it's kind of like what I was showing you a couple live streams ago about the bond market, how, you know, those smart money are afraid of something, right? That's why they are happy with 4% rate, and now I think it's even lower, lower yield. The 10-year went down pretty low this morning. 10 years bond. I think Bloomberg was the one. Yeah, this is usually a better website. So see, when I did that video a couple of days ago, it was 4.1 or something like that. So now it's even lower. So what does this mean? It means that, you know, the big guys out there are afraid of something, right? That eventually these 6 months are going to go lower, like less than 2% or whatever, right? But currently, of course, the Fed is still saying that they're going to keep the rate higher for longer, and they're not going to raise anything, or they're not going to even cut it. So yeah, it's remained to be seen. Obviously, there's a lot of money, liquidity in the treasury bond right now, because they're buying for this rate right here, 3% or whatnot, you know, just to lock in that safety of yield. So again, and this is why the stock market, you know, usually the equity market went down when that happens. If you see the S&P 500 for today, you would kind of like correlate to that. Let's see. Oops. Crazy. All right. So yes, this is a one-day drop, right? Flee to safety, right? People are stampeding out of equity. So, and when that happened, obviously expect GameStop to go down. I know, it's kind of like hand in hand, walking in hand with each other, I feel like. And again, they will do this until they can't do it anymore. I don't know how long it's going to be like this, but just expect the worst, hope for the best type thing. When it comes to the price, anyway, I'm not talking about the balance sheet of the company here. So again, price is different from the balance sheets of the company. Price could do a whole bunch of stupid things all the time, right? Because people are panicking, people think that it's a shitty company. I'm gonna keep saying all the same thing over and over again until people kind of realize there's something that happens. Hi Shane, thank you for joining. There was something that was said in one of the video I watched. I forgot what the video was about, but the guy was like, you know, it takes 10 times to override, you know, misinformation, but it's only take 1 time to spread the word, right? So it takes 10 times the amount of effort to try to correct people when you know, it comes to like chaos and all that stuff. So that's why it kind of sometimes it feels tiring when you repeat stuff over and over again, but I think it's needed to be said. So yeah, so the price action is going to do just that. It's just gonna react to whatever. And so if the SPY is going to drop from, it's been my theory all along, so I'm curious to see if it's gonna play out that way. So if the SPY is going to continue to sell off, because again, panicking, people are taking profit perhaps, right? GameStop gonna fall along with it as well. How low can this go? Well, nobody knows. But that's the support line right there. If it bounces off of that and kind of continue to, all-time high again, that's remained to be seen. But it seems like in March it's going to be another Fed meeting, and he hasn't said anything about whether it's going to be a cut in March or May, right? So if he said no, then the market's going to continue to sell off until then too. So the price that I would be looking out for, I don't know if I draw this right, you guys, so don't take any trade based on this at all. I'm just an amateur here. So if it breaks this channel, I would be worried. Is it gonna happen in one day? I don't know if that's gonna be the case, but anything could happen. When was a large drop right here? I think this is pretty brutal, right? Down, but it bounced back up a couple of days and then down, right? So it could happen pretty quick. How about this one? Look, gapping down, right? So. And then if you look at the Russell 2000, maybe that's another index fund here. So Russell 2000, GameStop has quite a bit in it, right? Like 2 or 3% or something like that. Pretty cool. Okay, let me see what's. Sorry, you guys, I'm just like going through chart here. I don't have any more topic to go, so if you have any questions, feel free to ask. So this is a Russell 2000. If you were to put, hold on. Can I put SPY here? Okay, so SPY versus Russell. Okay. So who's lying, right? So S&P 500 went all-time high, while Russell 2000 is down here. Now, I think the Russell 2000 is a mid-cap, right? Or small cap. I need some help over here, you guys. Is it small cap or mid cap? Hold on. Small cap. What does small cap 2000? So Russell 2000, it's a stock index that comprised of the smallest 2000 company in the Russell 3000. Okay, I see. So we're a small company, you guys. GameStop is in here. Safe and sound. We're good. We made it in this world, so we're good. Let's see. Alright. Oh, you know what I'm interested in looking up now? I was looking at XRT earlier. Now XRT is infamous for being shorted to oblivion, right? I don't know where I see that. So it's kind of curious to me that they don't give you like the percentage short, right? How many outstanding shares are in this ETF? Does anyone know? Okay, short interest. Sorry, I'm trying to learn, you guys. Okay, so it seems like, okay, it takes 2.5 days to cover. Short interest, 18.6 shares being shorted on this particular ETF. So why this ETF is so important is because it has the most GameStop in it, right? Retail. They've been shorting retail like crazy, and of course, I'm sure when they short these ETF, they're trying to get as much shares of GME to do that as possible. So, but I don't see any ratio, you guys. So I don't know if that is even possible to find out. See, like, why don't they give this percentage? Maybe because it's ETF, or it's just expressed differently. Who knows? Just my curiosity. All right. GME leaders. It's so funny that they use that terms, and honestly it works. Like, I'm sure it works so much, and that's why, again, these people are genius when it comes to like psychological kind of like side up to make people think the other way, and to use, you know, the same movement in order to ostracize a certain group, right? And so they call people names like GME leaders and all that stuff. And even though it's just that, hey, this is the correct information and you should get the correct information, they don't want to kind of take a look at it, right? And thank goodness, you know, I have an inkling to, and this is, again, I'm talking about Morantz all the time, because without him being persistent and pushing those truth out, you know, I don't know how many times I would be, you know, kind of, well, technically I'm of that mind already, that I'm like questioning myself, always questioning myself, but I'm thinking from the perspective of people who haven't been kind of giving it a second thought that, oh, AMC is not the same as AMC, right? Those two companies are not the same thing. And I remember them calling, you know, GME the leaders. All these people think that it's all about GME. It's not. It's every other stock out there. That is BS, right? I hope people up until this point still think that it's not all about GME, but GME is the only company that we caught them red-handed, that they don't know how to get out of it, right? Any company that is being shorted after that, they have learned their lesson already. I'm not saying that those company has never been shorted to oblivion. Not saying that at all. But those shorted shares in other company has been resolved already. And of course, they have their own, you know, board of director. People are willing to kind of, you know, sell their shares. You know, behind closed door, like Adam Aarons, right? They have it set up already so that, you know, if people are buying into the shares, they have their avenue of kind of getting themselves out of the position, right? Through share issuance, right? Through dilution from Adam Aarons. So just case in point in the AMC cases here. As far as other, you know, what is it? There's so many other stock, of course. Bed Bath & Beyond was one as well, that they were using to psychologically push people away from GameStop, obviously, and to say that GME Elite is ridiculous to think that it's only about GameStop, right? So it's amazing to me that those narrative is still hard to break, and kind of my case in point there. You know, it takes 10 times amount of effort to undo one one misinformation about GameStop or whatever. But hey, thank goodness, again, we have people like Marantz and, of course, me as well. I hate to put myself up to that level. I'm just a small YouTuber here, but yeah, I'm here for it. I'm here. I'm passionate about talking about GameStop. Passionate about talking about bond market. Just learning, as much as I can. So yeah, and yeah, GME for life. Yeah, I know. Of course, like it is a good company, regardless of what happened to GME before that. What happened to GME before that is just an icing on the cake, so to speak. GME doesn't need those publicity for meme stock or whatever. But although those are added value as well, because like, yes, it is annoying to be called meme stock and all that stuff because of all of the negative connotation to it, and all that stuff. But I think it's gonna work out for GameStop as a whole, as a household brand, at one point in history. It's only taken time because, like, again, those people are gonna die off, right? And think about how many people in Congress right now who are over 80 already, right? And again, like, I'm not knocking on older folks here. I love them. I have I have elderly parents here. I love them to death, but they shouldn't be running a country here. If you're 80 years old, you should at least think about retirement, right? Or at least this should be an age limit here, to when you should be high in office. I don't know why I got to that tangent, but anyway, with that being said, I feel like that's all I have, you guys. That's all I have. I feel like I'm ranting too long already. So yeah, AMC, of course, like what else to be said about this company, other than another reverse stock split, perhaps? So yeah, that's sad right there. Russell 2000 right here. Yeah, again, I don't know what's gonna happen if it dropped this low. I don't know. Anything's possible. Anything's possible. Okay, so that's around 30% drop right there. So if it comes down to kind of like the level of Russell Russell 2000 right here. Yep. Or Russell 2000's gonna go up. Right? One of the two. One of the two. It's so curious too. Look, there's hardly any volume right there. Lots of volume on the way down though, right here, right? So yeah, again, I'm sure they're doing the rerouting thing so that they could manipulate the price here too, on those ETF and all that stuff. So yeah, a lot of avenue over here for them to keep the price down or up at will. Depends on which company they are into, I guess. I am 35 years old. Oh, okay, all right. Well, good luck to you. Yeah, so, okay. I guess there's no question. Okay, I'm up here for 80 minutes, you guys. I'm pretty proud of myself. It's close to an hour and a half there. So, I guess I'll see you tomorrow. Let's see, I don't know what time, so I might be late a little bit. So, depends. Really depends. Okay, I'll see you when I see you.